In the quiet yet formidable realm of investment philosophy, few minds have shaped the intellectual backbone of modern value investing as profoundly as Charlie Munger, the lifelong partner of Warren Buffett, and the architect of a mental framework so elegant, so rational, and so brutally honest that it has become known simply as the Munger Mindset. A way of thinking that transcends markets, transcends finance, and reaches into the deepest mechanics of human judgment, behavior, incentives, and decision-making. To understand the power of Munger's wisdom, we must step beyond the familiar caricature of the witty, sharp-tongued vice chairman of Berkshire Hathaway and journey into the architecture of a man whose worldview was constructed through decades of relentless reading, multidisciplinary exploration, personal hardship, and a laser-like commitment to removing stupidity long before pursuing brilliance. For Munger believed that avoiding folly was not only easier than achieving genius, but far more effective in producing consistent, long-term success. His journey begins far from the spotlight of Omaha meetings and financial headlines. Rooted in a modest Nebraska upbringing during the Great Depression where he worked in Warren Buffett's grandfather's grocery store, a setting that quietly exposed him to the realities of frugality, discipline, and the difference between appearance and substance, lessons that would later form the bedrock of his mental clarity. After serving as a meteorologist in World War II, Munger studied mathematics at the University of Michigan and then law at Harvard, sharpening a mind that refused to be confined by discipline or tradition. For he saw knowledge not as isolated silos, but as interconnected strands that, when woven together, formed a latticework strong enough to support intelligent decisions across any domain. This latticework of mental models became one of his greatest legacies, the idea that investors must draw from psychology, economics, engineering, biology, statistics, and history to see reality as it truly is, rather than through the narrow lens of any single framework. And it was this multidisciplinary rigor that allowed Munger to perceive opportunities, risks, and incentives with uncommon clarity, unclouded by the biases that plague most analysts and executives. When he met Warren Buffett in the late 1952, the intellectual spark was immediate. Buffett was a prodigy of numbers and discipline, but Munger, older, sharper, more worldly, pushed him to evolve beyond Benjamin Graham's cigar butt strategy and toward the philosophy that would eventually define Berkshire Hathaway. Buy wonderful businesses at fair prices instead of fair businesses at wonderful prices, a shift that transformed Buffett from a brilliant investor into a historic one and cemented Munger as the philosophical North Star behind the empire. The Munger mindset is perhaps most famously expressed through his insistence on worldly wisdom, a concept rooted in understanding the fundamental drivers of human behavior, especially the psychological tendencies, biases, incentives, social pressures, misaligned rewards that consistently distort judgment. And it was Munger's deep study of these patterns that led him to identify and catalog the mental traps that sabotage investors. Confirmation bias, incentive-caused bias, social proof, anchoring, availability heuristics, and the corrosive power of envy. By mastering these patterns, Munger believed investors could learn to see clearly in a world clouded by emotion, noise, and misdirection. And it is this psychological clarity, not complex models or spreadsheets, that separates superior decisions from mediocre ones. Equally central to his wisdom is the concept of patient opportunism, the ability to wait for the fat pitch instead of swinging constantly, a principle he reinforced through his repeated advice. The big money is not in the buying and the selling, but in the waiting. A philosophy that Buffett later embodied so thoroughly that Berkshire's best returns often came from decades-long compounding rather than market timing or rapid trading. Munger also championed simplicity, an idea so countercultural in a world obsessed with complexity that it became one of his sharpest competitive advantages, for he believed that the hardest problems often crumble under the weight of basic, elementary thinking, provided one has the courage to be honest about what truly matters. And this devotion to simplicity allowed him to cut through noise, identify essential variables, and ignore fashionable nonsense that seduced countless investors into self-destruction. Yet beneath his intellectual authority stood a personal story marked by immense hardship. The death of his son, a painful divorce, financial ruin early in life, and years of rebuilding not just wealth, but identity. Experiences that forged in him a philosophy steeped not in optimism, but in sober realism. A worldview that valued resilience, integrity, and the discipline to endure suffering without losing clarity of thought. This capacity for brutal self-honesty shaped his famous inversion technique, the practice of solving problems by thinking about their opposites, asking not, how do we succeed, but how do we avoid failure? A method that became one of the cornerstones of the Munger Mindset, and a secret weapon that allowed him and Buffett to avoid catastrophic mistakes that crippled countless others. As Munger aged into global prominence, his influence extended far beyond Berkshire meetings. He became a mentor to investors, CEOs, students, and thinkers worldwide, delivering lectures filled with aphorisms that cut with surgical precision. Show me the incentive, and I'll show you the outcome. You don't have to pee on an electric fence to learn not to do it. Spend each day trying to be a little wiser than you were when you woke up. And beneath these sharp, humorous lines lay a deeper architecture of thought. A man convinced that discipline, rationality, and moral character are not only compatible with wealth, but essential to preserving it. And as we trace the deeper layers of his philosophy, mental models, human misjudgment, patience, simplicity, inversion, and ethical coherence, we begin to see how the Munger Mindset offers not just better investing, but better living. A framework whose next dimension reveals itself more clearly as we examine how his principles shaped Berkshire's greatest decisions, influenced generations of thinkers, and continue to illuminate the path for investors seeking clarity in a world drowning in complexity, especially as we explore how his worldview converges into a unified philosophy that not only guided his own decisions, but became a compass for generations of investors seeking clarity amid uncertainty, noise, and emotional turbulence. And as we follow Munger into the later chapters of his intellectual legacy, we begin to see how his teachings crystallize into a set of timeless, rigorously rational principles that operate like a blueprint for navigating both markets and life. Central to this unified worldview is Munger's deep conviction that incentives shape behavior far more powerfully than intentions, a theme he returned to repeatedly because he understood that human nature is not easily improved, and that systems must be designed with the expectation that people will follow rewards, avoid punishments, and rationalize self-interest even when doing so leads to irrational outcomes. This understanding allowed him to diagnose corporate failures, governmental dysfunction, and investment disasters with uncanny precision. For Munger, viewed every broken system as simply one where incentives had been misaligned long enough to corrupt judgment. In the investment world, this insight fueled his disdain for short-termism, excessive compensation schemes, and the cult of quarterly earnings, all mechanisms that seduce executives into trading long-term value for temporary praise. And it is precisely because Berkshire Hathaway rejected these distortions that it was able to maintain its culture of rationality for decades, while others collapsed under pressure. Another pillar of the Munger Mindset emerges through his famous reverence for compound interest, which he described not as a financial trick, but as a natural force that rewards patience, discipline, and consistency far more than brilliance. And it is this perspective that shaped his and Buffett's refusal to overtrade, their commitment to holding great businesses indefinitely, and their insistence that investors should spend far more time cultivating good habits than chasing hot ideas. For Munger, compounding did not apply only to money, but to knowledge, relationships, reputation, and ethical conduct, all of which grow stronger over time when nurtured carefully and fall apart when neglected or abused. This focus on long-term integrity is further reflected in his belief that reputation is built slowly and destroyed instantly, a warning he often delivered with the moral gravity of someone who had witnessed how arrogance, greed, and dishonesty can dismantle even the most successful enterprises. But the brilliance of Munger's wisdom lies not only in his ethical clarity or intellectual rigor, It lies in the practical tools he developed for improving judgment in an increasingly complex world. And among these tools, none is more powerful than his commitment to multidisciplinary thinking, the belief that investors must synthesize insights from physics, biology, psychology, mathematics, and history to avoid the blind spots that trap specialists inside their narrow silos. He often joked that if all you have is a hammer, everything looks like a nail, and he spent a lifetime building a mental toolkit rich enough to prevent the seductive simplicity of one-model thinking from derailing decisions that require nuance, humility, and cross-disciplinary awareness. This intellectual humility forms the bedrock of Munger's attitude toward uncertainty. For unlike many financial gurus who claim mastery over the future, Munger embraced the limits of knowledge with a calm, almost stoic acceptance, repeatedly urging investors to acknowledge what you don't know and to avoid the seductive temptation of false precision. To Munger, stupidity was far more dangerous than ignorance, because stupidity arises not from a lack of information, but from the refusal to confront reality as it is, and he believed that the world punishes self-deception brutally and without remorse. This perspective also fueled his devotion to inversion, the mental technique of approaching problems by asking the opposite of the usual question, avoiding loss instead of seeking gain, removing obstacles instead of hunting for shortcuts, focusing on what not to do rather than what to do. And it is this counterintuitive approach that allowed him to sidestep countless pitfalls that ensnared more impulsive investors. As Berkshire Hathaway expanded, Munger's influence became increasingly visible in its major decisions, from the acquisition of See's Candies to the investments in Coca-Cola, BYD, and high-quality businesses with durable moats. And each of these choices reflected his conviction that great businesses are rare, worth paying for, and superior to endless diversification. A philosophy that stood in stark contrast to the widespread practices of index-hugging and over-diversified mediocrity. Munger taught that it is better to own a handful of extraordinary companies than dozens of average ones, because extraordinary businesses compound internal value through pricing power, brand loyalty, operational excellence, and management integrity, while average businesses merely survive. And yet, despite his vast knowledge and financial success, Munger remained profoundly aware of human fragility, including his own, often saying that the best armor against life's disappointments is a well-developed sense of humor. And it is this humor, dry, blunt, unapologetically honest, that became a defining feature of his teachings, disarming audiences while delivering truths that cut to the core of human irrationality. In the final arc of his life, Munger emerged not merely as an investor, but as a philosopher of rational living, urging people to cultivate resilience, self-reliance, curiosity, and kindness, qualities he believed were essential for navigating a world filled with uncertainty, complexity, and moral ambiguity. And as he reflected on his own journey, he emphasized that the ultimate goal is not the accumulation of wealth, but the cultivation of wisdom, character, and good judgment, for these are the compounding forces that shape a fulfilling, meaningful, and ethical life. The Munger Mindset, therefore, is not a strategy, but a worldview, a disciplined, reality-based approach to thinking that rejects shortcuts, embraces lifelong learning, and seeks clarity above comfort, reminding us that better investing begins with better reasoning, and that the true edge in markets comes not from predicting the future, but from avoiding avoidable errors. And so the enduring lesson of Charlie Munger is that success, whether in investing or in life, belongs to those who think independently, act rationally, learn continuously, and confront truth without flinching, leaving behind a legacy that will continue to illuminate decision-making for generations, long after the sharp wit and patient wisdom of the man himself have passed into legend.